GM, good morning. Welcome to the Milk Road Show, the daily crypto show where your bank takes 3 to 5 business days and the blockchain takes 3 to 5 seconds. I'm your host, Jay Hamilton. It's Monday, August the 4th. Today we are joined by Pampati, head of ecosystem for Aptos Foundation. We're going to talk about the current pullback, why it happened, what's next, where are we in the cycle, and also we've got to talk about the SEC's big announcement last week titled Project Crypto. Not enough people are talking about this, but honestly, I think that we might look back on Project Crypto as one of the biggest moments and milestones in the adoption of crypto. We're going to jump into why that is and why it's important for you. Before we jump in, if you need any help with your investing, I highly recommend you check out the Milk Road 2025 investment guide. It's free. Hit the link in the show notes to download it today. It is very helpful for anybody trying to think about how to set up your portfolio, how to think about allocation within your portfolio, and how to understand cycles and cycle strategy in terms of when you should be buying and when you should be selling. It's really an absolute cheat code. So hit the link in the show notes. Today's episode is brought to you by Nexo, the platform that grows your crypto without locking it away. Also brought to you by Figure Markets. Grow your cash like a bank, no lockups, just real returns. Without further ado, Ash, welcome to the Milk Road Show.
Thank you, Jay. It's great to be here. True privilege.
Thanks, my man. Pleasure to have you. Okay, we got to start with the news of the day, which is we were all stoked through July, just ripping. The markets were hot. Every token was on fire, and then we maybe got brought back to reality a little bit at the end of last week. What's your thought on the current pullback? Why it's happening? What do you think for the current market?
From my perspective, I take a little bit of a longer time horizon than just this week. That's the beauty of getting to invest 80 to 100 hours a week working in crypto over multiple years. But, I think we've seen an amazing compounding effect of Bitcoin reaching all-time highs of institutional interests, ETFs, that I think it's just general. It's natural for the market right now to catch its breath, to put it quite frankly. I think a lot about cycles and what part of the cycle we're in now. And, I'm not a Nostradamus by any means, but the way I think about it is we've reached that point of mainstream awareness, but also the appetite for adoption that I think we've been waiting for more than a decade. And our market is maturing. There's deeper analysis going into different cryptocurrencies, how Bitcoin relates with altcoins, how Ethereum relates with altcoins, the future of smart programming languages. What does tech actually look like here on a public and private side? That I think the market overall is kind of evaluating to see what that new playing field or chessboard is for innovation moving forward. So I think it's all bullish. I think it's just a natural catching your breath moment.
Yeah, I think you know the rally through July was a little bit. It was a hard rally to understand, right? I mean, honestly, it's been a hard year as an investor to understand because things have not been following the typical patterns. But as you said, the biggest thing right now is just it's it's so hard in moments when it's amazing. It's like everything's green and everyone's happy and excited, and then there's one red day and one red candle and Bitcoin drops like 5%, and everyone's freaking out, right? And it, the my general belief is we are still in a bull cycle. We still have higher to go. We have not reached all-time highs for this cycle. I don't know, it's difficult to predict how long this cycle lasts, but 6 to 12 months is the general time frame that I'm viewing this on. And that these are not moments to look to be, if you want to trade around these moments, sure, go ahead, but really just stay true to your conviction and hold on tight, because particularly August, I could see us having further dips in August as we have low liquidity. We've got a lot of institutions here now. Well, what do institutions do in August? They go on vacation, right? And they're not trading. They're not active. So just everybody, just don't panic. Everybody stay calm. This is not some Armageddon moment. We're all going to be good. I don't know where the local bottom is right now. I get that question a lot. I don't know short term exactly what's going to happen. I do know that we're going to end the year higher. That's as simple as I can put it.
Yeah, I think that's well said. And I just think for those of us, obviously your audience that's listening to the podcast, but all of us that get to work in this space, what an incredible effect the last few months. We need to like really touch grass and be like, holy crap, like look at what we've done as an industry. We've broken through this mindset of, hey, is this a philosophy or is this a technology? Like we've broken through. Like that's huge, right? And so, as you said, like, there's probably more to go, but even just zooming out a little bit, we're scratching the surface in terms of like the potential for our industry. And I'm not a trader, so I actually just, like as I said, I don't look day in and day out at the targets and the prices, but I'm just so happy looking at the data the past few months and this year alone.
Yeah, when you talk about the the incredible steps that we've made in such a short time period, the big news last week was the SEC announcing Project Crypto, and I think one thing that's when the SEC makes announcements like this, it can get really it can be difficult to read through the long press release and really like grasp like, okay, like what matters within this. And it's them signaling that they want to be a leader in blockchain technology, as you said, moving from, hey, this is philosophical, to like, okay, like how do we actually use this stuff and how do we bake it into our financial systems, which up until now has been just a total like mud pit, a dumpster fire mess, right? Like nobody knows what's a security, what's a commodity, like, how do you classify your tokens, which is, Americans can't even access a lot of airdrops, right? Like all these, like, just like a lot of issues on really the regulation side that has led to founders having a difficult job, and users and investors being very confused about like what's a scam and what's not a scam and where do I put my money. And so I think the SEC's Project Crypto announcement last week is really, to me, we were chatting about this morning in our team meeting about how it feels like a really big moment. Obviously, the impact of that moment will come in the coming months and coming years. It's not like an immediate thing, but the it feels like a real turning point. I don't know on your guys' end, how Aptos received Project Crypto.
Yeah, I mean, we were so excited. And I think, as you said in the beginning, somehow we're all not talking about this enough. I think it obviously followed kind of the Genius Act and things like that, which we were all excited about. But this is equally, if not more exciting, right? And the way I interpret it is uh, projects building in crypto that have a token have had to operate with the lack of regulatory clarity. And you can only imagine the amount of burden that puts on a founder to actually build a great product, but also exist in Web3 sustainably, given the lack of clarity. It's like fighting with two hands behind your back. Number one. Number two, it's very confusing for users. So what you get is you probably get access to a lot of folks who are very bought into Web3, highly risk on, but you lose access to a bunch of folks who are just a little bit more mainstream in terms of their usage and behavior and user psychology. And I think that's limited user growth, quite frankly, for the crypto market for more than a decade. So this is huge. This is exciting, extremely exciting. And, for me, one of the reasons I fell in love with Web3, I spent over 10, 11 years working at YouTube and Spotify, great consumer brands, great creator companies. But why I fell in love with Web3 and why I chose to leave to join it full time is I found it fascinating how closely products could align incentives with their users, right? And I think tokens, whether they be non-fungible, fungible, are a core element of that, as well as decentralization and governance. And so now I think about Project Crypto, and to me, it boils down to, well, how much more of the tech market and goods and services can now benefit from that, can benefit from Web3. And that's what's super exciting. I mean, it not only opens up how many users these projects or companies can attract, and how much adoption we can drive as an industry. But it opens up a bunch of new use cases of projects that can actually participate in the on-chain economy. And then from my perspective on the Aptos Foundation side, we can be much more expansive in terms of startups we want to fund, or founders who have a great idea we want to invest in. So it's incredible. Like, I'm super excited for everything that's to come from this.
Yeah, I think one of the biggest things that sort of, I'm sure will connect to your view at Aptos, is we just need more founders and more builders in Web3 and in crypto, right? It is the biggest challenge to tech adoption and tech growth is you need a lot of people to experiment with the new tech. And we had that quite a bit for a period, but crypto was so impacted by regulation, and so many of these founders were impacted. And it's been scary, especially to be an American founder. Like, let's be real, right? During Gary Gensler's, reign, it was. Were you really gonna sit there and say, "Hey, I'm an American and I'm working at a Google or a Meta, and I'm gonna leave and go start a crypto company"? Like, there was a real pause. I'm sure you can speak to this yourself, right? Making that transition yourself. There's a lot of people who were very worried about doing that. And so they either did one of two things. They either left the US, right? Or they didn't go that path and they didn't explore this like incredible new technology. And so I think you can't understate, and I don't think that coming momentum of new founders and new builders, I don't think that's even happened yet, really. Like, all this regulation, all this shift in regulation is just happening like week by week right now. It's only been a few months of us getting this clarity, and there's still more clarity coming every day. And so I think that what I hope is happening is there's more builders and more developers saying, okay, yeah, I'm in now. I'm gonna go spend my time and I'm gonna invest in this. And 3 months from now, 6 months from now, a year from now, you're going to see the impact of that as you see more projects launching that are hopefully going to be the next big app or the next big adoption wave.
100%. And I think the flip side of that is the opportunity regular users have to be a part of the upside of innovation, right? Like, if you think about the ways in which you or I, outside of our day jobs, would have to access new startups building in the Internet of Things or AI, we have very limited ways to get access to invest to get upside in terms of those outcomes. Like, crypto solves this, right? I think we saw with Figma all of the controversy, right, in that IPO. And I think this is an area where, like, philosophically, fundamentally, crypto can solve. And with Project Crypto, it brings clarity to make it easier. But, more founders, less scary for them to get in the water, but users, like, crazy benefit, right? To, like, actually get earlier in the stack on innovation, especially American tech innovation through crypto markets. That's what's super exciting about this.
Yeah, and that's definitely what like Project Crypto. Uh, I think that like there's a mindset shift that Project Crypto establishes, which is like, hey, we want to be leaders. America wants to be leaders in the future of blockchain technology. They want to be supportive of builders. They want to protect builders, and they want to build and they want to give opportunities to investors, and they want to build the necessary regulation and frameworks to enable that. And that's the big signal here. And that is whether it be allowing Americans to get access to airdrops, right, is a big one that has been, a lot of Americans for a long time have had issues with, right, rightfully so, right, or whether it be understanding as a founder, like, is my token a security or is it a commodity, or what is the process to do a TGE for my token, and how do I do it in a compliant way? Like, all these things, which might like they're so obvious, but we don't have clarity around them, and that's really like the frameworks and the clarity that we're going to get from Project Crypto is it's monumental. It's absolutely monumental, and I think a major moment that we will look back on.
It's insane, and we're looking forward to publishing way more stuff around it. But we're extremely excited, and from a foundation's perspective, it's our job to help startup founders navigate these things, right? In the sense of, yeah, of course, we're a permissionless network from a tech perspective, but if you're building a startup on chain, what are all the things you need to think about, right? And so this helps us help them too. So super bullish.
Okay, I want to shift gears slightly to you and I were talking about Launchpads and consumer adoption and how you launch tokens and the pump versus bonk versus Zora on base and the different chains at play here. So I want to chat about that, and I also want to get your thoughts on the use cases that Aptos is excited about. Before we do, we just need to take one moment to hear from our sponsors who make this show possible.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Okay, we're back. Ash, let's talk about Launchpads. We got Pump, who did their TGE recently. We got Bonk, who's been getting a lot of attention. Zora, absolutely flying here. What's your thoughts on all these various Launchpads? Who's going to win? But more importantly, like, why do we need these Launchpads? And what do they do for founders and for investors?
Yeah, it's a good question. The way I look at it is these launch pads were a natural progression to how token issuance could happen on chain as faster and more efficient and scalable chains came to market. And so to me, obviously on the Bonk and Pump Fund side, meme coins existed on ETH for a while, right? But why were they interesting on Solana? Well, super low gas fees, Web 2 like UX, right? And which could scale to more users. And so now naturally you have a product or products that allow for thousands or tens of thousands at its peak in daily token launches. So to me, I look at it as kind of a natural outcome of high throughput, highly efficient chains in terms of that product existing. In terms of what makes those products successful, it's the community in both of those, not only Solana but also Base and in terms of ecosystems. And so, what's interesting to me is when I look at it from an outside in perspective, the meme coin craze on Solana was a natural extension of why NFTs found product market fit there, right? It was easier to access, a bunch of DeFi primitives built up around NFTs, and then meme coins, specifically Bonk, hit, and then kickstarted like meme coin season, and then Pump Fund came, and now everyone's kind of like Solana's won that war. So I look at it as not something that happened overnight, but tapped into a community that existed like a couple of years before. Base to me is super interesting because clearly it looks like they were very focused on native token issuance, right? And they looked at what was happening on Pump and Solana as an area they wanted to make tremendous progress with. And so I think one, they had a strategic advantage in distribution on the Coinbase side. But two, I think they had a very elegant, or at least a interesting way to have an opinion on what would be the new narrative for token issuance with creator coins and working with Zora within their ecosystem of dApps, as well as the chain itself. So that was interesting. And I saw even last week that native token issuance on Base like outpaced Solana for the first time ever. So clearly something is paying off. Now, whether those tokens have any intrinsic value, it's not up for me to debate, but they are happening and people are participating. I think Who will win? It's really hard. I ask myself that question a lot. I actually think from an ecosystem perspective, the ecosystems that'll win are the ones that adapt the most quickly and are the most willing to iterate. I just think it's there's never a steady state strategy on the ecosystem side. I think it's, hey, what's happening now and how do we keep capturing attention? That's what makes working in crypto extremely exciting, is the game theory around it, right? It's basically saying like, yeah, you may have a strategy of where you think this market's going in 5 to 10 years, but if you don't execute on a quarterly or monthly basis, you won't be here in 5 to 10 years, right? So like, so I think for me, like, who will win is the ones who adapt like most frequently. But it's interesting to think about where it's going to go, right? So like the for me, the principle I always have in my mind is the an inherent characteristic of the health of an ecosystem is how often are new tokens being issued, right, on chain. And obviously, meme coins, creator coins are things that have happened. So, what is the next venue? And I've been thinking a lot about, especially with clarity around Project Crypto, as that further develops and becomes more clear, is how how do we as an ecosystem or network work with startups that want to go public? In a way, right? That's super interesting to me, and an area that we're kind of closely looking at in terms of where that next narrative or that next positioning in terms of how projects come to TG.
Yeah, let's dive into that a little bit further, because it is obviously a key stat for any L1 chain or L2 chain, is token issuance, right? And then not just like, okay, great, you can issue millions of token on your chain, but like token activity within that issuance as well, right? And that is obviously very challenging to achieve. So tell us a little bit more about like how are you framing that at Aptos, and how are you looking to increase token issuance? Is there particular use cases that you focus on? How do you take those steps, and how do you achieve that end result?
Yeah, it's a good question. I don't look at it as a random event that you hope happens. I look at it as a practiced effort you put into place in sequence. And so for us, our main focus early was we need a bustling, thriving, interesting DeFi ecosystem, right? Can people trade tokens? Can they earn yield? And why is that interesting on Aptos, a super fast, super secure network? All of those projects should go to TGE, right? Your native DeFi protocols should have tokens, and that is kind of your pillars of basis of an ecosystem, right? Then from there, it's what are the projects that are coming onto the ecosystem that are real businesses, like they are earning revenue on chain, they have a good customer growth life cycle, they have enough runway through third party investments. How are those projects going to TG, right? Maybe they're outside of DeFi, maybe they're doing gaming, maybe they're doing, you know, we have one project doing human verification for AI data training, you know, but they're real businesses that they have like good customer life cycle growth strategies. That's the next phase. And then I think then it's the bottoms up organic. How does token issuance just happen, right? And I think that's kind of how I look at it as a sequence, but it's kind of a building block pyramid. I don't think native token issuance just happens out of nowhere.
Yeah,
Yeah.
it's a great point that you need the DeFi infrastructure within your ecosystem to support the token trading, the token everything around that, even just like things like block explorers and like those very simple things. Um, let let's take a step back here for a sec. The If we look at the L1 landscape, you mentioned we you mentioned Solana owning meme coins, right? It was set up to do that, and not on purpose. Not like Solana's strategy was like, hey, we're going to be the meme coin chain. More so that their tech allowed them to be very well set up for meme coin trading, fast, easy, low friction, one chain, all of that. when you look at, I mean, Ethereum's having a moment right now, more as a result of narrative, not necessarily that any of their like on-chain stats have changed recently, and a result of all the digital asset treasuries that have come onto the scene around Ethereum. Lots of people talk about Sui as the next L1, which is very interesting because there's always the direct comparison of Sui to Aptos because both those founder teams came from Meta. Hype has been on Ethereum getting a lot of attention. How do you look at the L1 landscape? Where does Aptos fit within there?
Yeah, it's a good question. We ask ourselves, I'm sure as you do every day, why are there so many L1s? And I think that's a reality of the fact that we are still waiting for adoption to keep pace with the technology, right? I think our technology is outpacing the adoption right now. And we're getting to the point where that'll flip, I believe, in the next 2 to 3 years, where tech will have to improve to keep up with the scale of adoption. That's where we need to get as an industry, right? Things need to break, things need to be pushed and strained for us to keep innovating based on usage. From an Aptos perspective, the way I kind of synthesize it is our origins were at Meta, as you mentioned, but like the objective for our infrastructure and systems level thinking was to move money around Meta's billion user app economy. So it had to be really fast, right? Near zero fees as well as highly secure. And we created Move as a native programming language at Meta that we've adopted and integrated within the chain. So we are built for billion user scale adoption. Now, where are we focused? I think we're being pretty scoped in our focus of where we think value and adoption will come from. The first is value exchange, and that's really around trading. I think that's where crypto has found product market fit over multiple cycles. I would argue that it hasn't innovated enough over those past 10 years in terms of new users, differentiated experiences, what DeFi actually means. But now more than ever, we have an opportunity where really high throughput blockchains, highly secure like Aptos, can actually compete with centralized experiences, right? So you can have a decentralized promises with centralized UX. And that's because of projects like Aptos and blockchains like Aptos in terms of how they were built. So now we think about that, which is great. And then we also think about the types of assets that can be issued on chain that aren't only native to crypto, right? So equities, commodities, insurance data, there's tons of RWA types or classes that can now come on chain and be traded in interesting environments that only crypto can enable. So there's a value exchange area that we're hyper focused on, where we believe every asset can be traded in interesting ways through crypto rails on a really fast blockchain that competes with central exchange UX, but also is highly secure. Like it's highly secure in philosophy, process trillions of dollars in philosophy. The second is value creation. So, for us, and I'd love to hear your opinion on this, is, crypto, DeFi, past 10 years, cool. You know what I mean? Like cool stuff, like has it turned into 10 or 100 or a billion user economy? No. Right. And so I think the other area for us is for value exchange to continue to compound and for Aptos to continue to grow by focusing on it. You need to focus on value creation. And so we're very focused on there. We just announced a big project that we've incubated with Jump Crypto called Shelby. It's a hot storage data network that allows for things like decentralized streaming services to be built fully on distributed systems, which allows for amazing economics between creators and users and platforms, and even opens up other verticals as well. So that's kind of the two areas we're super focused: value exchange and value creation.
The first thing, okay, so I want to go back to what you first said. I completely agree. We have more infrastructure than we do adoption, right? And that's a very interesting thing to notice because of the fact that adoption is very tied to regulation. And we did not have regulation. We are getting it very quickly, as we said at the beginning of this episode. So what that will, one big thing that I think is going to happen in for the rest throughout this year and into 2026 is I do see a large adoption cycle coming, driven by institutions, mostly financial institutions, around RWAs, right? And all these financial institutions, they're sitting here looking at stable coins, which is a form of an RWA, right? It's just taking a US dollar or another currency and putting it on chain and pegging it, right? And they're sitting here, they're saying, wow, look at that business model that has product market fit. It is an incredible a 10x upgrade of the current financial system, and people want it, right? There's user adoption of it. And so, and that's just one form of RWA. You can go down the list of all the other types of real world assets that could be brought on chain. And I think we have the infrastructure, now we have regulation, and we're going to have all these institutions that will create adoption very quickly because of their scale and their size and the amount of users that they work with. And they'll just abstract blockchain. Like I'm talking about like banks and fintechs just starting to use blockchain in the background. You don't even know it's being used, but that's now how your money is moving. It's moving on chain versus moving in the old fiat system. So like that on the financial side, I see that coming in a big way. And when I step back, I certainly feel like Ethereum is the leader there right now and is set up very well in that space. The thing that I'm unsure about is, and you can feel free to comment on my thoughts there, but the thing I'm unsure about is like the attention economy and the attention side of the internet. I'm not sure where that goes. And it comes back to Facebook and Meta, right? Is like, how are they going to and I don't know if you have insights on this, but like, is Facebook going to one day, it would make so much sense for Facebook to do something on chain. I mean, shit, they already basically tried when they built, they had the Sui and the Aptos team working together back in the day. And they were working on that. And so whether it's like, are they going to launch a stable coin, and how will they allow value transfer? Are they going to use blockchain for identity on their platforms, right? Like we all know that the AI problem on these social media platforms is already exploding. Every day I'm on like Instagram or on X and I'm like, is this AI? Like I can't even tell anymore, but you kind of like, that doubt is entering your mind. So that the Web 2, I feel like I'm clear on how financial institutions are going to adopt blockchain. That feels more clear to me. How Web 2 is going to adopt blockchain and the social media companies and the attention of companies, that part I'm not so clear on yet. And I don't know which L1 wins that and where that goes. I don't know if you have thoughts there.
It's a really good question. I just want to say, in terms of RWAs, I do have to pound our chest on Aptos. We're totally number 3 in terms of volume and TVL on RWAs, just behind Ethereum and one other. So we're super bullish and like hyper focused there. In terms of your question, amazing, right? In terms of where we're at right now and us kind of disrupting the whole financial technology sector, like unlimited bound, like holy shit, like whoa, you know what I mean? Like we're all going to the moon, straight up, But I think what you're saying is interesting, and it kind of makes me think about like I was looking at the Sam Altman Zuckerberg headlines of him poaching researchers for like 100 million, $1 billion. And I was like, man, those headlines are crazy. Crypto doesn't have those headlines anymore. Mm-hmm. We used to, right? We don't have those headlines. And I thought about it. And I think one main thing that we also as an industry need to be conscious of now that institutions are here and we're going to revolutionize financial technology services, we have to keep the imagination super high, right? And right now, AI has no upper bound or no ceiling in terms of the imagination, right? In terms of market potential, market cap, how much an AI researcher is worth. And I think for us, like we have to continue investing in amazing founders who are going to build the next great dApp. In terms of the intention economy, how the YouTubes or the social networks get involved in blockchain, I think one very easy use case, and I'm not speaking on behalf of any of them, I'm just looking from a analysis perspective, is hey, would it be more efficient for money to move on rails through our global app economies than traditional systems? The answer is probably yes. But the solution probably requires a lot of stakeholder, management and incentive alignment. But that's an obvious area, and I don't think you need to create your own stablecoin to do that, right? And so I think that's one area that would be super interesting. Obviously, Meta, you think about WhatsApp being like the portal, for example, all of India's attachment to the internet, like that's something where, it'd be beneficial to have like boundaryless crypto rails moving money. And in terms of other aspects, I think about NFTs a lot. And I think about NFTs because I believe that across our industry, they were the closest ones to tapping into the mainstream zeitgeist. Like you could ask anyone, and someone would basically, if they're on the internet, they'd be like, "Yeah, I heard this monkey sold for like $1 million. Like WTF?" It pierced, and I think that is about online identity. And I think that is about online identity that is abstracted from our bio data or where we went to school. And I think that is going to be even more important moving forward in terms of how you represent ourselves on social networks. And so I am very interested to see where NFT technology goes. Like obviously they probably won't be PFPs, but how do they think about sovereign, fully identifiable, but built on your online identity stamps, and how does that change your experience on all of these networks? That's what I'm going to be really excited about.
Yeah, it's a great point.
Yeah.
And I also let me ask you this. And I know you didn't come from Meta with the original founding team at Aptos, but you're obviously you've got insight here. Like, is there still conversation happening between Meta and these founders and the Aptos team, or between, or maybe it's more on the SUI side? Like, are these conversations happening? And is there, because like the thing that stands out to me is I just want I know you don't know exactly, but like they've got to be. I want to know, like, what are these big Web two? What is YouTube thinking around blockchain, and what are they doing? Are they thinking, oh, we're gonna, and more so from a like, which chain will they use and how are they thinking about that? Or are they going to develop their own chain? Is that how that will work?
Yeah, it's a good question. I can't comment specifically on any specific brand, but the way I would talk about it is, what is the incentive for them to do this, right? I mean, building a blockchain is freaking hard. Maintaining it is freaking hard. And also, if you don't have a token, how do you do distribution? Is it just infrastructure? There are a bunch of questions, right? And I think uh, one idea is, can you help traditional services go on to 24/7 markets, right? By building infrastructure, integrating with a blockchain, whether it's money movement or trading, right? That's, I think, a motivating factor. But I always put it, because I worked at a big company before. Every year you go across every vertical or product area, and each one of them puts in 5 or 7 game-changing annual initiatives that we need to innovate on. And I can tell you the trade is always against that stacked order list, right? So if you're a large company, what is the benefit of you giving up some AI progress for this, right?
Mm-hmm.
I don't know. I don't know what the answer is to that. I think for me, what's interesting is Stripe, specifically what they are doing, right? Like I think Stripe, they have a very clear point of view, right? Like we're payments, we're the global GDP, we're using on-chain rails. Like I'm like, whoa, what's going on there, And that's incredible. Like they're an extremely opinionated distribution funnel that thinks about architecture in a certain way for payments. That is super interesting. Now, the question to me comes down to what stakeholders in our in our crypto economy are willing to interact with a private blockchain like that, right?
Mm-hmm.
Can you see an exchange interacting with the Stripe L1, right? Binance with the Stripe L1, or will Binance want to continue operating in its public permissionless network? And then there's other pockets of stakeholders too, right? So that's where I'm fascinated to see in terms of the go-to-market evolution of, big tech building blockchains and, big blockchains like us taking an opinionated point of view on go-to-market.
Mm-hmm. Yeah, fascinating, super
Yeah.
interesting. Ash, just it's really interesting to get your thoughts today and have you break down how you view this from the foundational side and from the builder side as you look to really increase adoption and support so many founders. Everybody listening, I want to remind you guys, as always, that none of today's episode was financial advice. I'm not your financial advisor, and Ash is not your financial advisor. But Ash, pleasure to get you on the show today. Thanks for joining us.
Appreciate it, Jay. What a privilege. Thank you.
Thanks for listening in, y'all. If you want to hear another great episode, you got to tune in tomorrow, because tomorrow we have Michael Howell on the show to break down what is going on with global liquidity. And we all know that the global liquidity is one of the biggest factors in moving markets. As global liquidity rises, as there's more money in the system, there's more opportunity for assets to rise along with it. So get the update on the global liquidity and what is happening on the macro side. Tune in tomorrow. Thanks for joining us, y'all. Have yourselves a wicked awesome day. We'll see you guys again tomorrow. Crypto still has two major problems. First, a lack of privacy. On-chain transactions are public by default. Second, using your most valuable tokens for everyday actions feels wasteful. Midnight solves both with a dual token system. Night is your store of value, designed to hold. Dust is what you spend, a private renewable resource used to fuel on-chain activity. You generate dust by holding Night. That means your value stays intact while your actions stay private. No more burning your bags, no more exposing your wallet to the world. And now the Night airdrop is live. Go to midnight.gd to claim yours and explore the ecosystem. Secure your spot before the Glacier airdrop phase ends. Check it out today. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.